it is actually protected against bankruptcy, which is pretty interesting. Over on the right-hand side, we've got SMSFs. And this is kind of a bit of a trick here. Does anyone know the tax rate of a self-managed super fund?
15%.
15, yeah. So 15% is one tax rate. Does anyone know the other tax rate?
10%.
And not quite. It's less than that. Rick, you may know. John, awesome, 0%. So and this isn't a trick like the trust was. In certain conditions, your self-managed super fund can actually pay 0% in tax on what it earns. Now, the differentiator between the two is the 15% tax rate is what you pay when you're accumulating your balance in super. The 0% tax rate is what you pay when you're taking out a certain type of pension, and you meet the requirements to have that concessional tax rate of 0%. And at the top here, I talk about business structures. Now, we don't have any clients running businesses in their self-managed super funds, but we have a number of clients who own businesses in their self-managed super fund. And what often happens is, like, if you've got a structure up here, or the business that's earning profit, and the profits go back to the self-managed super fund, we have clients that are earning significant amounts of money in their self-managed super fund from a business that are actually paying 0% in tax on that, which is one of our actually the one of our top clients actually contributes the most to our tax saving tally each year on that one. So and it all comes down to the structure of the business, the structure that the actual business is run out of. Now, there are requirements to owning businesses in self-managed super. It's not as easy as just setting one up in there. There's a lot of things you need to tick off, paperwork you need in place. So I'm not just saying everyone rush and do that. It sounds pretty good, but yeah, you need to make sure you are doing what you need to do from a compliance perspective too. So that's self-managed super fund. Now, tax planning, it's pretty good. I mean, on the start of it, like, the maximum amount of tax you're paying in super is 15%, which is almost half a company tax rate or a third of an individual's highest marginal tax rate. So it's sensational, really, from a tax planning perspective. Now, in terms of asset protection, a self-managed super fund gets 2 ticks. Now, the reason why is it's not just a separate legal entity like a company is to a sole trader, but it is actually protected against bankruptcy, which is pretty interesting. And that's assuming that you haven't just known something bad is happening and just chucked a whole heap of money in your super fund thinking it's safe. If you've made inconsistent contributions to your fund lately, they can most likely be unwound in the case of bankruptcy. So, but if you're making 25 grand contributions a year for 10 years, and then bankruptcy happens in the last year, they're not going to say that your 25 grand is out of character. Like, that's a bit sus. So, but the superannuation balances are normally protected from bankruptcy, which is, yeah, as I said, pretty good. And you can't get much better asset protection than that.